why you need PBX Club, why you need to subscribe to PBX Club, and so that you can trade very seamlessly simple. All right. One, to make use of PBX P and L trading strategy. That's price action and liquidity concept trading strategy. Why you need that? And now, why you need that again to have access to PBS scanners, the simplest scanners in the market, and to take gold, scalp gold like a pro, right? So you need to be in Plan B Express Cash Flow Solution Club. That's PBS Club. Now, now quickly let me show you why that is important and why is that going to help you, why you're going to maximize the market coming into PBX. Now, so P&L trading strategy that we deploy is done this way, irrespective of the market trader you are. So it's a combination, it's a hybrid strategy, price action, liquidity concept. Of course, some few things about the institutional footprint. So we'll talk about institutional footprint. And so, which this strategy just centered on three things: where, why, and when. Where should I enter the market? Why should I enter there? And when should I enter the market there? So let me quickly just show you something. Now, this is good. The first thing I do on PBS, we always tell our clients to go to the fundamental, that's economic news to check. Do we have any high impact news for the day as a day trader? It's very, very important. Now, so this record is done on the 9th of February 2026. And so if that's the case, so I want to check, do we have any fundamental news today? No news. All right. So quickly, then we'll go back to the analysis. All right. Now we'll go back to analysis. So we're going to go to daily time frame. Now, what we do in daily time frame is very simple. Okay. So we look at the daily time frame. Of course, we want to look at the structure. So let me just take off all of these things. So I'm going to take off all of this drawing. So take a plain chart. Now we have a plain chart this way. Now, if you look at it, what we look at first in the market when we come on daily time frame, we check few things. Of course, if you're my student, we check to mark a pivot point. Pivot point are quite important for us to look at the market inwardly. And of course, we look at the pivot point on daily time frame, right? So our pivot point first is to check the previous day high and low. Very, very simple, very important. So let's look at it. This is the previous day high or low, and then we have the previous day high over here. Irrespective of when I'm coming into the market, this is very crucial to mark out. Now, there are other pivot points that are very significant that can form a limit because they are liquidity area. So this can be one. All right, that's how we do ours. Now, this is a bit far off, but it's a pivot point. Now, so what this is gotten, of course, you will look at it. Should I go back to all of this? No, this is not important. We want to concentrate on where matter to us as possible right now. So on daily time frame, we could look at, we'll not be able to critically look at where the structure change here. Okay, then we have this, right? So this is market structure shifting, come over here. And so, but let's go to 4 hours. This is what we call top-down scanning. So we're doing the top-down scanning on 4 hours. So a very quick one we do is look at, this is the established low. Okay, call it established low. So this is an established low. If this is an established low, that means what we have here, it's break of structure, or what you call shifting market structure. So markets have shifted here. This structure was going down, now shifted here and rallied up to this point. Does that make sense? So if you look at this, so this is a shift in structure. The structure shifted, that makes a lot of sense. Now, quickly, I'm going to take my Fibonacci. So follow us. That's how we trade. Then we go to a swing high of this market. Quite fantastic. The market, so if you look at the swing high of this market, using my Fibonacci tool, then I could have something here significant. So this should be where, right? On 4-hour time frame is called where. Where means where should the market come to for me to pick a trade? So ordinarily, when this market was up there. Now take up the Fibonacci tool. Now the market actually come back to that point as at the time, people will be afraid but that's an entry ordinarily. Now I'm going to go down to 1 hour time frame. Remember, when I open the market, remember this is the previous day high, right? And the previous day low. All right. So I'm dealing with this guy. So if the market is going to sweep and return back inside this point, so I probably look at it that I'm going to be selling down to this point. That's one of the first things. Then ahead here is another liquidity that the market could actually rally to and then start coming down. But that's not the issue. So we take the market as it were. I always tell people price is fractals and you negotiate with the price, not giving yourself a guarantee, oh, the market must come down to this point. Quickly, we go to 1 hour time frame, very simple. Now, getting to 1 hour time frames, what was getting was that the market was a downtrend to this point because we have the market can break down to this point, and we have the market squeeze down here, and then we have a break of structure down to this point. Make a lot of sense. Now, if this is the last break of structure that we can have on 1 hour time frame, you can just have that here. So that makes a lot of sense, right? And that means this market to have this as external structure here over here. Then that means this point should be the major external structure where the market needs to actually break for you to confirm a return. All right. So here we have a low, and then here we have a break of structure, and this is the established low, and then this is a high that need to be taken out, and then probably look at this point. So if that is the case, so I'm going to look at few things. What other things I'm going to look at? Now you can see why the pivot point is quite important, right? So there are a few things I'm going to look at. This is a point, and this can be an inducement. That's a liquidity that was created for the market to return and take it out and probably land to this point. So that means I'm going to have this area of importance. That is another where that you expect market probably to return back to, and you are looking for a buy. You get it? So this is an immediate one that market can be very crazy because gold had some disrespect to some structure to an extent, right? So when you have this, so when market happened, got actually opened, it created a break, right? A gap, a very big gap here. Now, if this gap was created, so here was already a break of structure because of the body close. Yeah, this is a body close over this point. So let me just adjust this a little, okay? All right, so this is a body close. That means we have a structure break. 1, 2, 3. This is another structure break on the, okay? This is another structure break on the previous day high, which is another pivot point. It's a break of structure. So that's the recent break. That's on 1 hour time frame. A recent break, and then the market, So I'm going to take to 30 minutes to an extent. Now, there's something significant about the previous day high and low. Now, if the market break below the low of the previous day and retested it and gets rejected, that means we'll continue going down. If the markets sweep that previous day low and then return back inside, that means a sweep of liquidity of the previous high, a day low, and then returning back up there, then actually retested back again. That means the market is taking up to a high side. And exactly again too, on this high, which is a point that's very, very crucial. Remember, market's about liquidity, and liquidity is the fuel of price. So liquidity attracts price and the movement of the market. So for instance, liquidity are area of orders that market need to get to, and actually that destabilize and redistribute the market movement as it were. So here is that the market actually broke out to this point, and that's the previous day high. Now I expect the market to return back, perhaps close below, and then that means how my dealing activities or dealing range will be functioning to take down this low or break it and get, all the way around, as it were. But what market did was very simple. The market actually returned back on top of this point. So I'm going to go to another lower time frame. So which means this gap can get filled, and this actually happened in this filling. So I'm going to go to 15 minutes quickly. So in going to 15 minutes, very simple, right? Now going to 15 minutes, we still have the normal internal break of structure. So we have this. So this is an internal break of structure. So we have an internal breakup structure. That means we have a point, an area of interest here, or area of focus, which has to do. That means this was already mitigated. It's not useful again. So what I'm going to have can be just a support down here that the market come down to. But as far as this one is concerned, it has already been mitigated. I have no business with that. Now, this is a break. Now, the market actually retested it. That means here was already another high that was retested. So that means we have a new break of structure here. Make sense? On 15-minute time frame. Quite good. And then we break about here. Now, looking at all this point here, do we have a new break of structure? Now, this is 15-minute, ladies and gentlemen. You have to treat it as an independent structure on its own. Then this is a new break of structure. Could make sense? And then we have so many area of focus. All right. Now let's take this area of focus. This is a liquidity. And then we have area of focus here, and then was mitigated. Fantastic. So if this was mitigated, what would market be interested to come and do there? Now, the market may not be interested because already mitigated. Fantastic. So let's quickly go. That's a break of structure. And now, so that means this structure that was broken here, now this was mitigated immediately. So you're going to have another break of structure here. Very fantastic, right? So we have another break of structure here on 15 minutes. So where are we going to be having important focus? Now, this means this 1 hour was a very perfect one, but we're going to refine it to another area of focus here. That means we're looking at this point that markets will come back to mitigate. There are quite a lot of things that you're going to go to. Now, this is 15 minutes. That means quite fantastic. We want to come back to this point to get mitigated. That's not an issue. But let's quickly go. Remember, this was the previous day high, which market can return to it to become a retesting area, and markets pull up from that point. So I go back to last point that many people don't like to go to, which is 5 minutes. Now quickly look at it. On 5 minutes, the market actually shoot out. Very fantastic, very far away. Sometimes when gold or Bitcoin move far away from this area of importance, that had created a lot of things, it probably may not return back yet, because there are a few things we're going to check here. This move away was very strong, right? So that means this is a breakout structure. Now, this structure was broken up to this point. Even on 1 hour is the same thing. Now, there are a few things you're going to be checking. Number one, you're going to look at this is a fair value gap here, or from here to this point, it's a totally fair value gap. Number two, you look at another important point here, which is an opposing candle to form like another block. So that means here, now, there's no gold behave abnormal, very, very abnormal. Now, so I've marked this. The major point is supposed to be this, but gold can be very crazy, quite unfortunate. Now, gold returned back to this point, and then what did he do? Market created this. I was not comfortable with this guy, right? Why? This is not fantastic for me. I will not be able to have a major stop loss that I'm supposed to put. So for that, that was not my own entry point. So now, except if you're using 1 minute time frame, then that's where our scanner come to play. You can use a 5 minute, 1 minute, 3 minutes, and it will make a lot of sense for you. So, but that's not my entry. Then I waited for the market. Perhaps if I'm using my scanner, I will have just taken a sell here. I actually took a sell here, and then waiting for the market to come back to this point. What now happened? So my entry model, so I told you where, why, and when. Now, this is a where, this is a where. The market returned back here. Oh, this is an opposing candle, which formed like another block. So at this where, why will I enter here? I'm not comfortable with this. I need a very serious, powerful pile of free to form, or a CRT system to form. That's a swing point for me to find entry. This is not a powerful one for me, because I'm not going to have comfortable stop loss that's more reasonable. So I have to wait. Now, in waiting, this market came and broke this point again. And then I have a powerful swing point. This is a powerful swing point. A lot of people enter at the conclusion of this candle, which is the best anyway, so to secure. But for me, I enter a sniper entry for this. But at a point, if you might want to maximize this, I return back to 3 minutes. Now, returning back to 3 minutes, that gives a quick entry which is the accumulation, manipulation, and distribution. So that means I was going to be entering from here and my stop loss below this swing point. But this market was actually dangerous for me, except for scalping. If not, to take this and make a safety of this market, I must be below this last swing point here. Can you see that? The power of three down here. So taking this trade will not be normal structural entry, but it's going to be based on my scalper, my own scanner. So if you go to sniper entry core now, so you're going to find this very fantastic, right? That you can see this was a swing point. That makes a lot of sense. You will have traded this point, and then you have been in money, and then you see that another point here, that's going to make another money. And then the market continue. You can see that this was not given because this was not a powerful setup. And all of that, you have this very fantastic setup. And then you take a trade and your stop loss definitely. Then this is why we now use what we call the PBX pips level, which is called psychological level. In that point, you're going to find a trade and know where to put your stop loss appropriately. Now, that's not all. If you step down to 1 minute, you're going to find different entry up and down before the market actually sweep. Now, here we have this. These are structured market. Now sold here and then push up here. You never get here. My stop loss above this point, and then the market get into sell. And then stop over here. That's another entry if you're a scalper. Now, can I tell you something? Getting a scalping entry here already. Now going back here. It's already 200 pips. You don't need more than that to make much money in gold. If you look at this is your entry. At this point, this is your entry. And then taking over to this point, when the signal comes, that's 250 pips. Does that make sense to anyone? Now, again, the market, it didn't show anything here, no problem. But if you're the type that know where you are waiting for the market as your area of focus, then definitely you're going to add more position when this happens. And then if this one happen, you come over here. That's another 360 pips, ladies and gentlemen. Now, this another entry, perhaps, as the market give that, because when you go to the psychological level, you're going to find this entry. This already 210 pips, ladies and gentlemen. Now, after that, another sell over here. So this is too massive. So here, getting to this point, that's about 230 pips, ladies and gentlemen. Then we have this, and the market get an entry again. That's here, this point. And then take it to this point, that's about 280 pips, ladies and gentlemen. Return back to this point and get supported here because of area of focus at this point. Then that means this is the change in state of delivery. So at this candle here, then this market will continue to have trail up to this point. And that's about 320 pips, ladies and gentlemen. So now, what is going to support me apart from this scanner? This scanner make a lot of sense. Sometimes we say, when should I exit? When should I enter? You enter when it give you the signal and has confirmed. How does it confirm? Very simple. When it's confirmed, it confirms by printing the three candles to be completed. And then you can be confident to say you are going into the fantastic market. Now let's experiment this. That's the importance of this scanner. Now go to the scanner. Look at it. Now look at this on 5 minutes. Look at this scanner on 5 minutes. This is a sell. Now, I always tell people confirm three candles because you may not be able to manage the trade. For me, once it's giving me this, I'm already selling. But for people who do not know much about it, well, you say, hey, you know what? You have to wait like this. And then let the third candle get confirmed. And your stop loss. When your stop loss is at this, when you are close to a psychological level, that's a pips level, the PPX pips level, then you have to engage above that, and then the market continue. Now, listen, our instruction is taking 50 pips to 100 pips. That's the importance of this PPS pips level. That means to this point, 70 pips. To this point, 170 pips. To this point, it's about 270 pips. To this point, it's about 370 pips. Up to this point, it's about 470 pips. Now, till when this engagement occur, that means you have done 470 pips, ladies and gentlemen. Now, the same thing here. You have this. Now, if this is too bogus, we always tell, hey, you know what? Don't enter when this is too bogus because look at this. That means you're going to enter here for conservative entry traders. Then your stop loss is going to be here. Then you're going to be targeting. First, this is 110 pips to 100 pips. 200 pips already done here. 300 pips already done here. 400 pips already done here. That's about, yes, that's 400 pips. Then that means the market continue. Now let's say once the P1 TP2 is taken, then you should adjust your stop loss into your entry. Chances are there that TP1 taken here, TP2 taken here. Okay, yeah, TP2 taken here, you adjust your stop loss into your entry, and then the market continue to ride. Now, this is the beautiful thing. When the market is too bogus to find an entry here, we step into 3 minutes. Step into 3 minutes, then that will have given you a proper entry faster than this one. So here you have this accumulation, manipulation, and distribution. Now you're taking a trade here. That means you're going to take a trade here at this entry and your stop loss, of course, below here. And then take it to this point already, that's about 440 pips. That's the beautiful side of it. Now, this sell portion there, when this candle get closed, then you want to find an entry from this point, and your stop loss is going to be above this point. So look at it, how it's going to run. Now, go to 1 minute. So 1 minute will have given you a lot of entry. Now, forget what's going to happen. Here you come down here. This is your early entry. This was your early entry. Now, having entered here, so that means your entry was going to be here. This is an entry, and then this is it here over here. Then your stop loss, of course, this is far off. Then you can use the sub minor. We have major, minor, and sub minor pips level. And so that you're going to use the sub minor. Then this to this point is already a massive profit, 130 pips, 240 pips, right? After that, the market returns. So remember we said, once we have taken TP1, TP2, the next is to adjust your stop loss into your entry point. Now the market continue. You don't need to panic once you have adjusted it. The market is doing what it's doing. It's none of your business so that much. Now, if you're the one that have been learning from our ecosystem and learning so much, you know that this is changing state of delivery. And then that will make another entry to this point. Look at it here. But if for you to be able to do this, you must have been trading and then focusing on gold as much as possible. Then the market continue. Now this continuation here, look at it. Now you've done how many pips already? So here you have this. That means here is 100 and something pips, 150 pips. Then this is 250 pips. This is 350 pips. And then the market continue. Now the market has given you another sell signal. But one thing you must understand is that the trend of the market now has actually changed, because this is a low and this is a high. This is a low. This is a break of structure. This is another low. So this market, the trend is up. So if you are selling, you have sold from here and put your stop loss above here, like I mentioned earlier when we were 5 minutes, then you probably be targeting this point or up to this point. Yes, the market can travel down to this point. Then if it does not, from here, you already done 50 pips. You are taking those profits and you are still conversant with the market trend is actually changed to the up on a lower time frame. So this is how this can actually help you to take money from gold like a pro without struggle. I'll tell you, ladies and gentlemen, you can see that market now is selling. Can you see that? It's selling, right? I've told you before we finish this class, you will have seen that we are done here. So if you go to 1 minute time frame, you will have seen that, oh, anyone who entered the market from that point, because this is this. So this is at the close of this. I told you when this candle close is the entry. And then this is already 57 pips. And then coming down to this point, that's 155 pips. And then it's going to get to this point, which I believe will get there. That's going to be 250 pips, ladies and gentlemen. So that's how it works. You are taking the profit one step at a time. And that's why this pips level is very important. This is one of the scanner. I've just shown you now, and this is the simplest of the scanner that help people to pick money. And then you don't need to ask me, where's my stop loss? Where's my take profit? Your stop loss is above or below your signal point. And if it's at this pips level, the PBS pips level, this is the psychological level, then your stop loss have to be below it entirely, because the market can return here. When you get this line and the market is above it, it's going to use it as a support. When it's below, it's going to use it as a resistance. And that's why you are taking stop loss and take profit in those regions. So we target 50 to 100, 50 pips, 100 pips, 200 pips in that order, so that you can always secure your profit. Ladies and gentlemen, this is how fantastic all this scanner. Another scanner we have, if you are the lover of SM. So now look at it, what I marked here, that okay, this market could return back to this point and created this. And that was the whole essence of marking this point. The market get there, and now take a bounce back. Now, if you don't use the pips level or what we call psychological level, you probably will not take profit early because you say, oh, the market have not gotten to where I'm looking for. But gold will have done 50 pips, 100 pips, and all of that. This is another type of scanner which supports if you're a trader of trend trader, and then see using our sniper PBS sniper calls. This is the very fantastic calls that combine. So look at it. Oh, this is Bitcoin. Fantastic. This is Bitcoin at the pips level. This is pips level. From here to this point is 500 pips. From here to this point is 500 pips. From here to this entire blue line is 1,000 pips. So look at it. If you're in this period, let's say taking a stop loss, perhaps look at the previous low, then you just allow the market probably to go below it a little. Then if that's happening, you're targeting the first take profit here. Now the market is rolling up down, right? So you're still targeting to the next point, right? This is how you target your profit to another next point. You get it now? So sometimes you can go to 5 minutes and stay put on your 5 minute as the case may be, right? So that's how you actually trade this market. Now, so once you enter the market, you change to more higher time frame to monitor your trade. That's how fantastic it can be. If you're an SMC trader, you're looking to how to struggle to plot, this is another scanner. Look at this. This blue line indicates a breaker block. So you don't need to start plotting, struggling to identify what a breaker block. When you subscribe for this scanner, we'll explain those details for you on what all this is. Now, this is what a fair value gap, right? These are all of those things. This is another block, this is another block, this is a breaker block, and all of that. And of course, your PBS sniper calls help you to identify your entry point. And of course, you see that this market was here. It gives you more confidence. Where should I put my stop loss? Below the breaker block, all right? Below the breaker block. And then where should I target as my profit? This high. Then so you can see the market is gradually going there. It can pull back to this fair value gap because I don't think it was mitigated. If it has been mitigated, no problem. But I think it has not been mitigated. So the market can travel back to it. So if you are an SMC trader, you want to have this scanner and then fantastically enjoy your trade. The same thing, if you are still an SMC trader, you don't know session trading, look at it, it's a dead zone, because the next session that will be opening now is London session. And that's where it show you that as much as possible. It show you area of interest. Look at it, area of interest. Now, when the market was here, it was showing area of interest here and eventually return back there and now start showing why. So look, I told you this is why, and this is where, and then when it come there, it reacted this way. When should I enter? When it give you this formation. So our where, why, and when is actually three pillars of our market model. And then you would definitely enjoy it if you pay attention. This is another scanner that you can always love to take advantage of. Look, I told you that this scanner, look at this. So you can see the market is still struggling here. That means when you enter here, your first take profit is done. You are waiting for the other one. Your stop loss is standby. I know that I told you. So the market needs to come down here up to this point before taking off again as much as possible. Ladies and gentlemen, so we have all of this that will make you navigate the market like a pro, especially gold. Come on, especially gold. You will love to trade gold when you have access to these scanners. You will love to trade gold when you have access to all of these scanners. Look at another one. This is another powerful one. Look at it. As you did the market, this is 5 minute time frame. The market doing what it's doing. If I go to 1 minute or 3 minutes, this will have find this entry. But you can see now, you probably don't find it. If you're not careful, you remember we said this is the point. Now, taking profit step by step is one of the biggest assets you can always do. Look at it now. See the market? Can you see that? So I told you the entry. Now, look at if you go to the PBS pips level. Can you see now? It's still struggling here, but you expect that, oh, the support level, but definitely you still want to see how the market is going to crash down from this point. But you have taken your first take profit and your stop loss is tightened on the other one, no problem. But at this point, you cannot trail your stop loss because the market can even return back to this people's level, which is the psychological level, and finally still sell down. That's why you cannot just adjust your stop loss from there. Does that make sense? So if I go to 3 minutes or 1 minute, you can see the selling and all of that. So you can see that why was the market reacting at this point? That is a psychological level. the market got to. But if you are not using that, you probably wouldn't have sold this and take your profit here while waiting for the other one to be taken. And that's how powerful. But remember, I told you that the market's already an uptrend on this lower time frame. And that's what you must understand as much as possible. So these are our scanners. Now, if you are the type that trade what we call demand and supply, you still trade demand and supply with our PIPS sniper call scanner. So we have a scanner that showed you, so we call it DNX. So PBS DNX in combination with PBS sniper calls can give you fantastic days. Look at this, the demand zone. So the market returned back to this demand zone. It didn't get to this supply zone, but you already find a selling opportunity. And looking at the market, when you get down here, these are where and why. Oh, it has hit at the demand zone in the market now trending to pave a way. And then so you're finding an entry to take your market, and you'll have been taking your profit as much as you like. So if you look at it, there's a point now. If I go back to 3 minutes, it's going to do the same thing, right? You're going to find an early entry, and of course, you can see the demand zone. The market can yield, and then you're going to find the market continuing to move up. So if you go to 1 minute, you're going to find similar thing. Then just that, the repetition of the demand zone will be much. You can see that. So the market here, look at it, point here, market return, create another. So at each of demand zone on your 1 minute time frame, you can see that you are going to actually find an entry. I told you this is the change in state of delivery. That's another type 2 power of 3. This is type 2 power of 3. This is type 1 power of 3. And then we have other type as much as possible. So look at this market. You've taken this trade and you are taking profit here. It asks you to sell. Then you are still looking at this, saying, okay, this was a demand zone. Then the market could come back to mitigate it. That means you're looking at the market will return back here. If you get back here and couldn't hold, then you are looking at the other one, which is another powerful means of trading. So whichever one you are interested in, you can inbox me at this number +2349047044998. I take the number again, +2349047044998. So chat and ask me which one. Tell me which one you want. Oh, I want the PBS sniper calls with demand and supply zone. This is it. Oh, I want the SMC style and all of that. We have different SMC, 1, 2, 3. One is this, okay? One is this. So you want it, and then can always be programmed for you. And you have access to it, yearly subscription. If you're a member of PBS Club, then you can have access to the first one, which is this one, the simplest and the most amazing type, which is the PPS Sniper and the PBS Pips level, which is called the psychological level. So you can always enjoy your trade as much as possible. All right, like I've said, then you have different strategy and different pattern that you can use, to maximize your trade and be free from struggle. Thank you very much. My name is Felix. I'm the team leader of Plan B Express. Plan B Express, together we rise. So this is called self-generated scanner, self-generated signals. So you don't even need Felix. You don't need anybody, all those Telegram channel, joining different Telegram channel. No, you generate your own signal at your own time. So you don't need to be awake because sometimes when signal are sent, maybe you'll be at work or you'll be busy. And then when you miss the signal, you say, oh my God, what have I done? No. Once you have this scanner, it's just for you to pay attention to the rules and regulations on how to use the scanner as much as possible. And then you are going to be very, very fine and making money with ease. Look at the gold, look at the Bitcoin now. So it's moving. So at the end of the day, if Bitcoin get to this point, that's going to do 1,695 points. So depending on what's your entry level. So at this point, look at it to the 3 minute, 1 minute. So look at it. So your stop loss is 378 points, right? If you use 0.0, if you use one standard, that's $378 as your stop loss. Then if you hit your take profit, that'll be $1,695. Then if you use 0.01, okay, you can do the calculation, or you use 0.1, you can do the calculation as much as possible. So thank you very much, and do have a nice time. Plan B Express, together we rise.